This episode is brought to you by Health IQ, a very special life insurance company that gives health-conscious individuals the best life insurance rates and quotes. Learn about what they can do for you specifically at healthiq.com/old dog. That's all lowercase letters and dog is spelled D-A-W-G. That's healthiq.com/old dog.
In a world where jobs are how most people make money, one man, one desire, one challenge dares to break the mold. Welcome to the Old Dogs REI Network, where we don't work for money. Money works for us. Coming soon. Viewer discretion advised.
Welcome to the Old Dogs REI Network, where cash flow is king. Real estate investing, the means, so you can enjoy your retirement dreams. This is the show where we cut right to the chase. No sales pitch, no long monologues, just simple how-to real estate investing advice, so you can earn the passive income you need to enjoy your retirement today. And now, your host and chief old dog, Bill Manacero.
Welcome to the Old Dogs REI Network. I'm your host, Bill Manacero, and this is the show where 50-plussers and anyone else who wants to join us gets solid, no sales pitch real estate investing advice to help generate real cash flow. This podcast airs twice weekly on Mondays and Fridays, and if you aren't already a subscriber, go to iTunes, type in Old Dog, spelled D-A-W-G, find our podcast, and subscribe. Well, today we've got an interesting guest because we're not doing sort of our typical real estate investing type focus, although it definitely pertains to what we're talking about. We're going to be looking at business credit and how you can leverage business credit for your real estate investing. Our guest is Ty Crandall. Ty is an internationally known speaker, author, podcast host, and a business credit expert. With over 16 years of financial experience, Ty is recognized as an authority in business credit building, business credit scoring, and business credit repair. Ty is the author of two popular books on credit, first named Perfect Credit and the other Business Credit Decoded. He is often interviewed on radio and news shows, TV programs, and magazines, including Entrepreneur and Inc. He currently serves as the CEO at Credit Suite, where he has helped create and grow one of the biggest and most credible business coaching operations in the United States. Personally, I came in contact with Ty through the internet and have applied a lot of his principles in setting up my business entity, using that to leverage my ability to be able to purchase property. So I'm real excited to have Ty Crandall as our guest here on the Old Dogs REI Network. Well, welcome, Ty.
Bill, thank you so much for having me. I'm really excited to be here.
Well, it's great to have you. And gosh, I think there's going to be some great information here for our listening audience. Just to give sort of a rough background of where you came from and how you fell into this really interesting niche.
Yeah, absolutely. I come from a really small town in Indiana called Elwood, and I joined the military to see the country, and they put me an hour and 50 minutes from my home in Ohio. So that strategy did not pan out well at all.
Love it.
And I was in the medical side of things when I was in the Air Force. I absolutely loved it. Got out and quickly made my way into financial services and really found a passion there, which, my dad was an accountant in financial services, so I guess I kind of grew up around it. But I opened a mortgage company. It was my first business. And at that time, I thought business was easy because it was the height of the mortgage industry. And then I hung in there too long and the whole thing crashed around me. And unfortunately, I, like a lot of people, lost nearly everything from homes and cars and my business. And, it's just a tough thing when your revenue gets cut by 100%. And then when it finally comes back, it's still reduced by about 90%. So it was really hard on me to go from, having all the things that you'd ever want to have and good credit to seeing the other side of the experience of running a business. And so I got back in. I started a consumer credit company, realizing a lot of other people were going to need help. And it's interesting because that's an important part of my life, because I think I went from doing business to make money to really shifted to really doing business to help people, because I understood on a personal level the problems that we were trying to solve. So along the way, so many people started to ask me about business credit. I didn't really know what it was. I looked into it, Google and YouTube. There just wasn't much information out there about it. But when I really discovered what business credit was and understood that a business has its own credit profile and score that's separate from the business owners, and for me personally understood that I could have separated my liability all along the way if I would have known about this, I got frustrated that people weren't talking about it, and that was the moment that changed my life. I decided to be that advocate, to be out there educating and teaching as many people as possible what business credit is, how it works, and giving everybody the option of separating their personal and business credit.
Well, that's great. It's a great service, and I think something that a lot of folks should latch onto. It's real. Just to give you a little background on myself, I have been sort of I was in the corporate world for years, and then I went into the mission field and served there for nearly 12 years. And for the last 20 years, I had absolutely zero credit because I made some bad decisions when I was really young. I paid off all those debts, and I decided to go totally debt free. And so I was debt free. I came back from the mission field and into semi-retirement here, and decided to move into real estate investing as a means to be able to supplement my retirement and for the future to build a legacy for my children as well. But I had no credit whatsoever, and so trying to get involved with real estate, which really is all about credit, leveraging credit, and so forth, and I had to start from scratch, and just started getting some credit cards, which I hadn't had in 20 years, set up a payment plan on a car, and do all these things just so that I could start to establish credit. And I worked real hard to get it up to, the high sevens, and then trying to use that to leverage my real estate investing. But I would notice that, every time I do something like we're doing upgrades on a rental property, and I have to borrow a lot to get to purchase construction materials or whatever it is, and then all of a sudden my credit would go, start dropping, and I'm going, wait a minute, all I did is buy something, I'm going to pay it back, all right? And I was just watching this little credit roller coaster, and I'm going crazy trying to get it to the point where it's strong enough that I can leverage it. And then I happened to come across your book about really establishing all your credit in this separate entity. In my case, it's an LLC, using that as a means to do all of your investing and keeping it away from your personal credit so that you can maintain that high credit rating in your personal side, which is always part of the fact, even though they have these non-recourse loans that we all apply, they still ask us all of our credit information. We need to keep that as strong as we can. I'd like to hear, from you, just what exactly would you define business credit as? And I'll ask you this because even though I've been trying to maintain it and grow it, it's still really hard to find out what it is. And to even find out what my rating is, you have to sort of sell, one of your children or something so that D and B will give you access to your numbers, right?
Well, there's a lot of great things that you bring up there. I mean, first of all, that's kind of the way credit is credit and finances, you don't think about them until you need them. And then usually when you need them, it's oftentimes too late. And that's why with consumer credit and business credit, there's going to come a time in your life where you're going to have to use your personal credit. There's going to come a time in your business's life where you're going to have to use your business and corporate credit. And it's best that you know these things that get started before that time comes than after that time. And you brought up a really good point that a lot of people struggle with is that, hey, look, I'm trying to use my personal credit to fund my business. But the problem is that's not what consumer credit was ever designed for. And that's exactly exactly what business credit is designed for. So when we look at business credit, it's very similar to personal credit. You have a credit profile that's linked to your social security number as an individual, and you use that credit profile to get mortgages and credit cards and auto loans. And business credit's exactly the same way. Your business has an EIN number. No matter what entity type you have chosen, you have an EIN number. And your EIN number has its own credit profile, its own credit score that's linked to the EIN. And just the same as you could build your personal credit to get mortgages and qualify for other kinds of loans and credit cards and auto loans, you can use your business credit for exactly the same things where it doesn't report on your consumer credit report. So it's a really big deal because, as you mentioned, when we look at FICO score on the consumer side, 35% of your score is how you pay, your payment history. 30% is your credit utilization. So if we look at that, we see that they're almost the same. I mean, when you overutilize your credit cards, you literally damage your scores almost as much as if you paid your bills late. It's just math. That's what credit scoring is. It's a mathematical formula. So this is why you can't use consumer credit to fund a business, because when you do, you tank your scores, sometimes by hundreds of points, just because you're overutilizing that credit. And for FICO, overutilizing is 30%. So if you have a $10,000 limit credit card, anything over $3,000 is hurting your score. And it's really preferred that you keep your limit below 5% or your balance below 5% of the limit. So again, that's kind of what business credit is, and that's why it's so important, because again, it's just consumer credit was just never designed. The capacity of consumer credit was never designed for you to do what you need to do to fund a business.
That's great. Now, is it possible for business to get business credit without the personal credit check?
Sure, absolutely. And this is one of the things is we're conditioned in this society that when a social security number field is on an application, we complete it, especially if it's an application for credit. And let me clearly state that it's illegal to put anything other than a social security number in a social security number field. So a lot of people that have challenge credit try to buy these CPN numbers, these credit privacy numbers. Well, you can't do that. You can't legally put anything in a social security number field. But the law does not state that you have to complete the field. You can leave the field blank on a business application. And when you do this, you're forcing the credit issuer to then pull your business credit. And if you have established business credit, then what happens is the credit issuer then makes the approval decision based on the established business credit quality without even looking at the personal credit. Now, when you do this, not only is there no inquiry on your personal credit report, but that credit reports to the business credit reporting agency. So again, you're separating your personal and your business credit. And that utilization that you use the accounts won't affect your consumer credit scores. And in my case, and personally, what's most important is you don't have the personal liability. You're not adding a guarantee. You're not personally liable for that card anymore or that credit you're obtaining. The business becomes liable. You don't become liable as an individual.
Great information. Now, one of the things that attracted me to the business credit side was that in real estate investing, especially in today's market, where, I mean, deals will slip out in a couple days if you don't do something like put some earnest money down or something to at least get your foot in the door for that property, which may disappear tomorrow. And I like that, because like with consumer credit, generally your limits are $5,000 a card or whatever. They're usually not in the amounts that would really make a difference when you're buying $1 million property or a multi-million-dollar property. But yet with business credit, you can get much larger credit limits, from what I understand. Is that true?
Oh, absolutely it is. And we talk more about what credit is used for, and this is called capacity. So you can't talk about credit without knowing that one of the core components of credit is capacity. And as an individual, you will never need $10,000 worth of credit at Dell. You're never going to go put $10,000 worth of home computers in your home. There's just no need for that. But in the business world, you could need well more than $10,000 worth of credit when you're actually buying computers for an office. So this is why the capacity is so much greater on business credit or corporate credit than it is with consumer credit, because businesses spend and need access to greater amounts of credit than individuals ever will. And I think SBA, well, actually, I know SBA quoted this to say that business credit approval limits are 10 to 100 times higher than what you see in the consumer world. So if you're used to getting $1,000 to $5,000 credit cards, it's very common to see $10,000, $20,000, $30,000 credit card limits. We see customers within 3 to 6 months getting $20,000, $30,000, $40,000 limits on their credit cards, which in the consumer world, it would take you years and years and years of well-disciplined borrowing to ever get to that point, if you would ever get to a $30,000, $40,000 limit account.
Right. Well, let's talk real practically for our listening base. Our audience are primarily 50 plus in age. Some are approaching retirement. Some are in retirement already. They're looking at real estate as a means to be able to supplement their retirement and to build a legacy to hand on to their children as well. But cash flow is the primary interest. But how can regular folks like that who looking at real estate in this way, how can they get started doing this? And what do they have to do first? I mean, do they have to form a corporation? Do they have to get a local business permit? What do they do to get started?
Well, the first step in building business credit is to set up a business. You're ultimately building credit for an EIN that's not linked to your Social Security number. So you've got to choose your entity in your state, and usually you can go to your Secretary of State and file any kind of entity. A corporation or an LLC are better because those you're not the business. If you're a sole proprietorship or a partnership, you are the business. You and the business are one and the same. If the business gets sued, you can get sued. If the business defaults on credit, you default on credit. But if you're an LLC or a corporation, you and the business are separate from each other. So that's the first step in getting set up. Set up an entity where you and the business are separate, such as a corporation or LLC. You can easily do that right at your Secretary of State. The fees vary based on the state that you're in. Once you've done that, you can go right to irs.gov and get an EIN number. It's absolutely free. And with that EIN number and that entity, you then have the core components of what you need to start building business credit. So the next step is to make sure that your business is credible. We're in a world now where you're going to start applying for credit. You're not going to provide your social. All they're going to have to go off of is the quality of your business credit. You don't have anything established. So they're going to default to the credibility aspects of what's on your application. So make sure you have a business website. Make sure that you have a business phone number, that you're not using a home phone or a mobile phone on the application as your business phone. Make sure you have a business email address, not a Yahoo or a Google address, but one with a professional domain, which oftentimes they come with your domain. If you need any licensing, make sure you have the licensing, and make sure that your business is listed congruently. Your Secretary of State, the IRS, the Yellow Pages, anywhere where someone can find your business, make sure that that information is exactly consistent with what you're going to put on the application so you're easy to find. If you've done that part, then you start obtaining real business credit. You can't go to stores and you can't go to your bank and Visa, MasterCard, just like you couldn't walk in your bank with no consumer credit and get approved, and you can't walk into Staples with no consumer credit and get approved. Business credit's the exact same way. You have to have some kind of established credit which gives you a credit profile and score before you go into those places. So the best place to start are vendor accounts. And vendor accounts are places like Uline, Quill, Seton, Monopolize Your Marketplace. Wells Fargo has a secure credit card, Granger, Gimplers. These sources will give you credit when you have none, but they also report the credit to the business credit reporting agencies. Remember not to put your Social Security number on the application. And once you've done that, then you've got an established credit profile. You've got an established credit score. Those accounts report, which we call trade lines in the lending world, or payment experiences. And again, those payment experiences and trade lines give you a good profile, give you a good score. If you paid your bills earlier on time, then you'll have good scores. And with about 5 of those accounts established, you can start moving on to store credit and even to cash credit from that point on.
Now, it sounds like it might be a little expensive getting started. What are we talking about to really get the foundation in place that you were talking about? The filing fees and maybe setting up a separate address and so forth. What are we talking about money-wise?
It depends. I mean, it often, if you're setting up a business from scratch, it can be $500 to $1,000. So, for example, in Florida, I can set up a corporation for $70. To get my Ring Central phone number is $15 a month. The IRS, the EIN doesn't really cost anything at all to actually do. So, I mean, you literally could do this. You can go to Template Monster and get a website template, and go to Upwork and find somebody to put it up for $200 total. So you can conservatively build a respectable business for sometimes less than $500, depending on the state you're in. Then there's states like California where it's $600 to set up a corporation, not $70. So in those type of states, it might be closer to $1,000. But depending on where you are, you could typically do this for a little bit less than $500 to $1,000, somewhere in that range.
Great information. Looking at this from beginning, I mean, you're getting that EIN number to actually seeing some real credit lines. What kind of time frame are you talking about?
Well, when you set up your credibility initially, the minute you start applying for those vendors I mentioned, you'll start getting approved right away. So you'll start getting vendor credit right away. And, for anybody that's doing fix and flips, this is very relative to what you do, because a lot of vendors sell things that you could use to be able to fix and rehab properties. So once you start using those accounts, then from that point on, you need about 60 days on average for those accounts to report to the business credit reporting agencies. Now, what's key here and what's beautiful about business credit is that the payment, the scores that you obtain are based on how you pay your bill. I mean, Equifax and D&B are strictly based on how you pay. If you pay your bill on time with D&B, you get an 80 score. If you pay it early, you get a 90 score. If you pay it late, depending on how late you pay, it could be 70, 60, 50. So when you get credit with Uline, Quill, etc., make sure you pay the credit as soon as you get that invoice. And then that will be reported as a good credit account within about 60 days. Once you have those 5 report within about a 60-day time period, then you can move in to start getting store credit. Lowe's, Home Depot, Best Buy, Amazon, Costco, Sears, Office Depot, Exxon, Apple, Shell. I mean, almost every major retailer out there offers corporate credit without you needing to provide your social. When you have 10 total accounts, including those vendor accounts and the store accounts, then you start to get access to Visa cards and MasterCards. And again, after you get the first 5, it takes about 60 days for those to report. Once you start to get store credit, it takes about 60 days for those to report. And once those 2 cycles are complete, then you can start getting Visa cards, MasterCards, actually cash credit. So to go from the very beginning stage to the end where you're getting cash credit takes about 120 days. And then as you continue to use your credit, pay your bills, your limits get higher and higher. And just like with consumer credit, it never ends. You will continue to build a bigger and more robust credit profile.
It's going to vary from person to person, but roughly, at let's say the end of 6 months, what kind of credit line could you actually be looking at?
Well, credit on the consumer and business side is exactly the same. It mimics the limits of the highest accounts that you have. So the question becomes in, let's say, 4 months or 6 months time, how much credit have you applied for? Did you apply for the minimum of 10 accounts? Did you apply for 20? How much are you using that credit? Those are going to give you higher limits. And the higher your limits, then the higher your future approval limits will be. But it's very common to see $30,000 and $40,000 limits within a 4 to 6 month time period. So I would say probably up to 50,000 you're going to see within the first 6 months. To get 100,000 plus type limits, it's tough to do. It's going to take probably a year or more of business credit building, but within 4 to 6 months you can start to get a multitude of accounts with $30,000, $40,000, $50,000 limits.
That's fantastic. And that's the kind of money that real estate investors are going to need, in many of these cases, just whether they're fix and flipping or whether they're doing a value add play with a multi-family, or you're going to put that down payment down to hold that property, and not so much maybe a down payment, but more of a earnest money type payment.
Absolutely. And that's why one of our top industries that we service is real estate investors, because when they walk into banks and financial institutions, they don't want to lend them money because it's all based on one transaction. Lenders want to see consistency. They want to see a lot of deposits and a lot of activity. So it's tough for real estate investors. They're investors that kind of shunned in the lending world been looked at as very high risk, but that's not the case with business credit. Another shortcut here for investors is if you do have somebody that has good personal credit, or you have a guarantor that does. So let's say you're investing and you have good personal credit, or maybe your personal credit's okay, but you've got another guy that wants to invest with you and his is really good. Well, you can use that personal credit, and we have a program called unsecured business financing, which is offered by a bunch of funding sources out there that we place loans through. And they basically issue you 5 business credit cards that do have a personal guarantee. These cards do have a personal guarantee. These cards are based on personal credit, but they report to the business credit reporting agencies. So instead of getting Uline and Quill and vendor accounts to start, you could use your good credit to get 5 business credit cards with high limits already to start your business credit building. And the nice thing about that is you're getting usually $20,000 all the way up to $150,000 in unsecured financing, even as a startup, no doc, no income verification, to get the money to buy the properties you're describing. And 150 grand could definitely buy some properties. And you're also building your business credit, which then helps you get even more money without the personal guarantee, without the personal credit check.
Now, are these cards also cards that give you sort of that offer, that 0% type of a deal for 6 months or 18 months or what have you?
Sure, it's 0% for 6 to 18 months, and you can do balance transfer. So we see a lot of clients that have done it the wrong way, and they put it on their consumer credit. They get this kind of credit. They're at 0%. They're transferring all their balances over. Their consumer credit score skyrocket, and then they have both. Right now, they have established business credit, the ability to be able to obtain more money based on that. Their consumer credit scores are high because they removed all the credit limits or the credit balances that shouldn't have been there to begin with. And it's great for startups, especially those getting started in the investment world, because you're buying properties at 0% for 6 to 18 months, which, as you know, if you have somebody that has an idea of what they're doing, can come in and get multiple properties during that time, and then build up a war chest of enough money where they can then start even considering buying their next properties with cash.
That's a great point. One of the things that I learned sort of the hard way as I would find a new property, I started shopping for loans and I contact everybody from Wells Fargo to mortgage brokers and so forth. One of the things that also I found out the hard way too is the more inquiries I had, then the worse my credit got, because that played against my credit scores on the personal side. Now, is that the same case with business credit as you have more inquiries as you're shopping? Do you also face the same thing if there are a lot of inquiries?
Not at all. And that's what I don't like about FICO. The FICO score has 5 different components. You've got payment history, which is 35% of the score. You've got utilization, which is 30%. The length you've had credit for, 15%. New credit, the inquiries as you're describing, is 10% of your score. And the mix of credit you have is 10% of your score. If you really look at FICO, it's almost designed to damage one part of the score as you improve another. If you think about it, if you don't have the right mix of credit or enough accounts you're paying as agreed, you need to get more accounts. But when you go to apply and get those accounts, well, then you put new credit on there, which hurts that aspect of the score. So it's just kind of a tug and pull.
Catch-22, yeah.
It really is. And it's designed where it takes you many, many years to be able to really get to a really high score. And, one of my buddies, John Alzheimer, who's the foremost expert in consumer credit scoring out there, did a big study on what it takes to get to an 800 score. And every person that got there had one credit card open for at least 12 years. So it takes a long time to really get really good credit in the consumer world. Business credit world, completely different. You could get a 90 or 100, a perfect credit score, literally within 30 to 90 days, because it's only based on how you pay. So utilization doesn't matter. If you apply for a bunch of new credit, new inquiries don't calculate into your score. If you overutilize those, it doesn't really calculate into your score. Now, the exception here is Experian. Experian's IntelliScore does kind of work like FICO, where it's based on payments and utilization, derogatory items, historical behavior, age, industry size of your company. But even with that, you're going to find that 85% of Experian is payment history. So even though inquiries do have a factor factor in their score, it's so minimal because 85% of it's based on payment history. So this is why business credit can be built so fast. You get accounts that report, you pay them as agreed, you get a good score, you use the good score to then start getting large credit limit accounts because the score is based on payment history and not those other factors as you're discussing.
For example, get a $50,000 credit limit and you need $45,000 for a purchase. Now, all of a sudden, you can almost max out your credit line. That will not hurt you in your business credit?
No, not with D&B and not with Equifax. With Experian, you would lower the score, and they would even tell you on the Experian report that it's because of that. But it's interesting because if you pull Experian reports, they don't even show your limit on there. They don't even show them. So, we pull reports on my live Facebook streams and Periscope streams for people live in real time. We pull their reports, we go over it, we give advice, and you'll see that limits aren't even on the credit reports, unlike consumer credit reports. So no, absolutely. You would affect your FICO SBSS score, which is what SBA lenders look at. So you would have an effect there because it looks at some personal aspects. Experian's IntelliScore would have an impact, although it's not great because primarily the score is based on payment history. But Equifax and Dun & Bradstreet absolutely wouldn't be affected. And the effect on your FICO SBSS and your Experian score would be so minimal. What they care about is how you pay your bills. But if you think about it, doesn't that make sense? I mean, that's why I love business credit. It's kind of common sense. You pay your bills and manage your credit, then you get a good score. That's really what matters, most important. If nothing else, that's what matters. So that's what I like about business credit scoring is it's kind of common sense. It's based on if you pay your bills. If you're paying your bills as agreed, then you get good scores. If you're not, then you don't.
That's great. Just a kind of off-the-wall question here, but what exactly is the Paydex score, and how much weight do lenders give that?
Well, the Paydex score is Dun & Bradstreet's credit score. So,
so that's their rating. It's just
that's their credit score. So when we talk about credit scoring, we talk about three main reporting agencies here in the United States. If you're going to Australia and other countries, there are other reporting agencies. But in our world, what we care about in the U.S. is Dun & Bradstreet, Equifax, and Experian Commercial. Now, Dun & Bradstreet's main credit score, and the main one used in the business world, is called the Paydex score. And the Paydex score literally is based on how you pay your bill, except they have a little tweak called a weighted average, which means your higher limit accounts have more weight into your overall score than your lower limit account. So if you have a $1,000 limit account and a $10,000 limit account, and you ever had to go late, you'd want to go late on the $1,000 limit account because it has less of weight into the overall score than the higher limit accounts. But that's it. It's based on payment history. It weights your higher limit accounts higher than anything else. Your Equifax, strictly no weighted average, strictly based on your how you pay your bills, the small business risk score. Then you've got Experian IntelliScore, and IntelliScore, like I've mentioned a few times, it has some other variables in it. Payments or balances you have, utilization, derogatory items, historical behavior, your age, your industry, the size of your company even accounts for 5 to 10% of your score. Those are the main three scores out there. Equifax and D&B completely based on how you pay. Experian mostly based on how you pay. But then also keep in mind, they also have a lot of other scores. It's not uncommon to pull a D&B or Experian report and see 5 different scores on there because they have scores that are for suppliers and scores that take your financial information into account and other things. But those are the 3 main scores in the business world: the Paydex with D&B, the Equifax small business score with Equifax, obviously, and IntelliScore with Experian.
Gotcha. Wow, we're just like zipping by in time here. I wanted to see if there was any last sort of comments or maybe advice you might have. Our crowd, as I mentioned, our listening audience are primarily 50-plussers, and if they want to pursue this approach to really help them in their real estate investing, what kind of advice would you give them right off the top? Yeah.
Well, the first thing is that you need to get credit before you need it, and that's the biggest mistake that businesses make. The majority of businesses that exist exist fail. And we all know that. And the statistics all show overwhelmingly that it's because of lack of access to capital. Something unexpected happens. They don't have the money to fall back on, and it puts them out of business. So the easy way to prevent that is just to get access to money right away. And like you and myself included, there's a lot of us that have bootstrapped businesses. And if you choose to do that, that's okay. But know you have a choice. There is money like the unsecured option we talk about that's even available for startups. Business credit somebody can obtain regardless of your cash flow, your collateral, and your personal credit. None of those things matter. So just know the money's there and just start going out and getting access and taking the steps we talked about here, building your business credit right away. Because whenever you apply for any kind of business credit card, any kind of business loan, whether you give them your social or you don't, they're pulling your business credit. They're making the approval decision on that. They're deciding your rates and terms on that, your limits, an amount they give you based on that. It's your business credit's as important to your business as your consumer credit is to you as an individual. So don't neglect it. Know it exists. Start taking the steps to build it and obtain and build your credit before you need it to get you through those unexpected times. And even then create a scenario where you don't have to bootstrap your business, where you literally are letting your business fund your business. And in my mind, that's how it should be done. That's what it's designed to do. And I know, Bill, and not to keep kind of going on a rant on this, but you talked about paying off all of your debt. I'm the same way. But businesses, we're not built that way. When you look at companies like Apple and Walmart, as much money as these guys have on hand, they still borrow money. They've got as big as they are because they're very good at OPM, using other people's money to grow. And that's what it really comes down to business. You can bootstrap your business, or you could use access to all this capital that's out there to help you fuel it. The only difference is how fast you'll grow. When you have the capital, you could just grow at a record pace compared to you trying to bootstrap and do it on your own.
Great advice. I think that's the reality that more and more people, I think, are facing, that are on the real estate side, that you can do so much on your own, but really there's a certain point where you're going to need that flush of capital. And just keeping in mind, you don't want to get in over your head with anything, but in many cases, especially with real estate, you're looking at pretty short time periods that you'll be able to pay off that money that you borrowed pretty quickly as your property generates cash flow, as your property builds up equity, and that's really, really good information. After our little lightning round here, our wrap it up section, I'd love for you to be able to share your contact information, how people can find out more about what you're doing as well.
Hello, fellow old dogs. Before we jump into our wrap it up session, I just wanted to let you know that an important part of being a successful real estate investor is knowing how to regularly reduce expenses. It's a big part of what I do every day to maintain a healthy real estate portfolio. Well, I try to do the same thing with my personal finances as well. When I heard about a health insurance company that gave special rates to those of us old dogs who try to eat right, exercise, and stay healthy, I got very stoked. Health IQ gives health-conscious people the best life insurance rates and quotes. Learn about what they can do for you specifically at healthiq.com/old dog. That's all lowercase letters, and dog is spelled DAWG. That's healthiq.com/old dog. Check them out.
Everything that we say here will be outlined in detail in our show notes, which are on the olddogsreinetwork.com website. Ready, Ty? I'm going to ask you a series of quick questions here, and you'll give me quick responses, and that hopefully will provide some good information for our listeners.
I'm ready when you are.
How about your favorite real estate book?
Rich Dad, Poor Dad.
All right. A lot of our favorites. How about favorite business book?
Power of Positive Thinking.
All right. Good one. Most valuable website for success?
YouTube.
Favorite app?
It's an app called Waze, W-A-Z-E.
Okay. Is that the one, the traffic one?
Yeah, I love Waze.
I love that too.
I love it because I have a lead foot, so it tells me where the police are, but it really gives us some shortcuts around traffic, so I use that quite a bit.
Oh, yeah. It saves you when you're stuck on that frozen freeway, especially here in Southern Cal, so great. How about your favorite quote?
Success occurs when opportunity meets preparation, and that's by Zig Ziglar.
He's one of my favorites. That's great. Okay, and this final question here. If for some reason
everything you built up, your whole business, everything, you lost everything, and you only had $1,000 cash to try to get it back and restart, what would you do with that $1,000 to try to rebuild your business?
I would do exactly what we talked about on this show. I would start a new business, and then I would take the remainder of the funds I have and use it to start building the initial trade lines to get me access to, $50,000, $100,000 worth of credit, which would make my life a lot easier to build it.
I love it. And how can people get a hold of you? You've got some great resources. You're all over the internet. You've got good content. How can people find out about that? How can they reach you or your company?
CreditSuite.com. That's CreditSuite, SUITE. So CreditSuite.com/EIN. And at CreditSuite.com/EIN, we've got a great guide that maps out in more detail the exact steps for a company to build its business credit.
Oh, excellent. Well, great. Ty, it has been a fantastic time with you. I think this is a great resource that I'm hoping that our listeners will really evaluate and see if that will help you in your particular strategic plan in real estate investing. And Ty, as you know, and as our listeners all know, we always close out our shows with our guests giving us their best old hound dog howl. And being from Florida, I don't know how many hound dogs you have around there, but I'm sure you've got a good idea of what hound dog sounds like. So, what do you think? Are you ready to give us your best old hound dog howl?
I'm ready.
All right, go for it.
Howl!
All right, great.
I have an office full of people here, so I don't want them to all come running in scared.
They will wonder, what is he doing in there? Well, thank you so much, Ty, for being our guest here on the Old Dogs REI Network. We really appreciate it.
Thank you so much. I had a great time. Thanks for having me.
Oh, it's our pleasure. And I also want to thank all our Old Dog listeners out there for joining us. I know there's a lot of other things you could be doing right now, but the fact that you've taken the time to join us really means a lot, and we appreciate it. Also, as I had mentioned a little bit earlier, everything we presented here today will be included in our show notes, and it's accessible through our Old Dogs website. That's Old Dogs, DAWGS, REINetwork.com/blogs. Well, that's the show for today. Remember, a cash flow is king, real estate investing the means. And until next time, keep moving forward, and may God bless.
Thank you very much for visiting the Old Dogs REI Network. We would greatly appreciate if you would stop by iTunes and let us know what you think of the show. We would love if you could subscribe to the podcast, give us a 5-star rating, and write a review. The more ratings and reviews we receive, the more visible the podcast will be to others. Thank you.